Hey, welcome back to The Dive. Today we're chatting with Noelle Acheson, Director of Research at CoinDesk. But before we get started, if you're into small caps, consider giving us a follow by subscribing below. Hey Noelle, welcome to The Dive.
Thanks so much, Cassandra, for having me. It's great to be here.
Okay, so yesterday, Fed Chair Jerome Powell said Bitcoin is not a useful store of value. It is merely a speculative asset that is a substitute for gold. What are your thoughts?
Well, first of all, not surprised. Second of all, let's have a think of who's saying this and what he has to defend. And thirdly, it comes down to the definition of store of value. If a store of value is something that's going to hold its wealth, hold its value relative to whatever you want to hold it relative to over the course of time, then Bitcoin is a store of value compared to something like the dollar, for instance, which has been a traditional store of value over the past few decades. And why? Because Bitcoin has a limited supply, whereas, as Jerome Powell knows more than anyone, the dollar obviously doesn't.
Okay, so do you see any sort of regulatory restrictions or rules that create risk for Bitcoin?
Yes, there is always risk in any new technology, and Bitcoin is a new technology. That's something that we tend to lose sight of. It's so much more than a new type of financial asset. So the risk would be if Bitcoin becomes so successful that it starts to, fulfill Jerome Powell's worst fears and pose a threat to the dollar, because it is indeed a better store of value. And if people start to use it as payments, then there is a risk that the regulators might want to step in and probably not ban it, because we've seen from attempts to ban it in places like Nigeria and Morocco that it's not been very successful. But they would try to regulate it, control who gets to use it. And the risk there is that that might take away some of the reason that Bitcoin exists, which is as a decentralized form of payment, as well as a decentralized store of value, a way to transfer value without going through middlemen. But that does imply a certain lack of control, a loss of control, which regulators tend to not like.
Okay, so what do you see as some of the key price levels we should be watching for Bitcoin?
Oh, that's a very good question. To be honest, it's at a much higher price than I expected it to be at this stage. And I should have a caveat that everything I say is my personal opinion, not that of my employer, and also not investment advice, obviously. But the strong run up that it's had has been surprising, because the institutional interest has taken off a lot faster than I expected. And this is another feature of Bitcoin that has regulators as well as investors somewhat concerned, I guess, and that is, with a limited supply and increasing demand, you're going to have fast run-ups.
So you have spoke in the past of how institutions are going into Ether first. So this brings us two questions. What exactly is Ether? And secondly, why are institutional investors attracted to it?
Now, that's a really fun question. The first one, some institutions are going Ether first. Bitcoin has been the institutional on-ramp for years now, because it is the original cryptocurrency. It's the most liquid. It's the one that you learn about first when you're diving into the space. It has the highest number of on-ramps as well, and the clearest regulatory regime. It's not a security, for instance. Everyone's in agreement on that. But Ether is an entirely different type of cryptocurrency altogether. This is something also that many investors do not understand, that each cryptocurrency is different. They can't all be lumped into one big category. Ether, whereas Bitcoin is a store of value first, and as we talked about earlier, Bitcoin is a store of value first in the technology. Second, Ether is the other way around. Ether is a new technology. It purports to be a global computing application platform. This is a phenomenal invention, and it's also going through some very deep technological changes now, while it is still working. And having a front row seat of watching such a technological experiment happen is really quite thrilling. So Ether is a technology play. It's like getting in really early at the venture stage of a very hot new technology. But the difference is it's a liquid market with all sorts of on-ramps, with derivatives now. So it's an entirely new type of technology play that investors are finding attractive. It is also, though, a store of value, not in the same way that Bitcoin is, because it doesn't have a supply limit, but the demand is increasing faster than supply, and that is the definition of the store of value.
Cool. Okay, so there's lots of talk about NFTs. Where do you see NFTs heading in the future?
I wish I knew. It is such a crazy, crazy sector. I'll tell you what I think is going to happen to NFTs. First of all, there's a lot of hype, let's be honest. There's a ton of hype with everybody that you can think of NFTing just about anything that you can think of. But that's what happens when you get new technologies. You get a lot of froth, you get a lot of crazy ideas, and then things settle down into some real value. And what NFTs do that we've not had the technology to do before is allow us to place a value on intangible things like feelings, like pride of ownership. When you buy an NFT, you're not buying something you can touch, you're buying something that produces a feeling in you. And the younger generation of investors that live their lives online and on social media are very used to paying for experiences and feelings. And now, through NFTs, in so doing, they can more directly support artists that they care about. And if we extrapolate that forward, not only could it give rise to entirely new business models that could lead to a new type of artistic financing, but it could also lead to other types of assets, such as unique investment contracts, unique insurance contracts, unique types of real estate investment. It's hard to imagine what could emerge from this. The fact that we're seeing such fun applications emerge now shows that interest is really not going to go away, and the creativity is just getting started.
So are you seeing any other cryptocurrencies emerge that might become a mainstay?
That is hard to say. I will say that the interest in the decentralized finance segment of our industry is growing again faster than I thought. I personally, as head of research at CoinDesk, I focus on what investors are going to be looking at, institutional investors, professional investors mainly. And a few months ago, I was certain that no way would they look at anything other than Bitcoin. Lo and behold, they start looking at Ether, as we talked about. Then I was certain that no way are they ever going to look at some of the decentralized finance tokens because they're just too illiquid, too small. I was wrong. They are starting to look at some of these. Why? Because of the new technology aspect. Decentralized financial applications are very compelling, especially when we look at what happened with the GameStop issue. We start to realize some of the rigidities in the current financial structure, but also because these decentralized financial applications offer yields 5%, 15%, 25%, and investors are very interested in that. You can't get those kind of yields outside. There's risk, a lot of risk, and some of these platforms are not audited, or most of them are not audited, so investors have to be wary. But if an investor has a certain risk profile, then this does make sense for them to start to look into. Do I know of any particular ones that will do better than others? I don't actually. It is all such a new field that the winner, the position of winner in that is still up for grabs.
All right, so last question here. If our audience wants to follow your work, where do they go to do so?
Thank you, Cass. They can follow my work at CoinDesk. We have a research hub where you can find all sorts of information, insight, and context on a wide range of aspects of our fascinating emerging crypto markets. That's coindesk.com/research. And you can follow me personally, Noelle in Madrid, on Twitter. And I also write our newsletter. Let's write the newsletter. It's called Crypto Long and Short. Subscribe on coindesk.com.
Awesome. Well, thank you so much for joining us on the show today, Noelle.
Thank you, Cass. It's been a lot of fun.
Thanks for watching. And before you leave, you may want to hit that subscribe button so you can find us again.